This is the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Nate Nead of investmentbank.net. Nate, thank you for joining us.
Thanks for having me. Sorry, it's actually .com.
Oh, no problem. That's investmentbank.com. So Nate, can you tell us a little bit about how you got into this business?
Sure. So as most people would have, or most careers go, it's not a straight line, right? It's very crooked. There was a time where I was accepted to dental school, and I eventually decided not to go after working for a dentist for some time, and then ended up working for a boutique M&A advisory shop up here in Seattle prior to and just after my MBA at the University of Washington here in the Seattle area. And most of my time spent there was working with individual company owners looking to sell their business and exit profitably and really maximize the valuation of their companies. And in doing so, you come across a lot of people who could make it to the next level if they had either more capital, human capital, or financial capital. And so I ended up moving from that group and working with some folks out of New Jersey, a broker-dealer out of New Jersey, and working on probably a more healthy 50-50 mix between raising capital as well as still assisting companies to sell. And the whole purpose there is to take an illiquid private company, maximize its value internally and optimize from operations to finance to marketing and sales, and then take it out to market and sell it for the highest possible price. That's really, it's kind of a staged approach. From startup to complete exit, that's where we sit. And it really depends on the opportunity and the industry. But because of our exposure online, we see deals all over the world and all over the map in terms of size, industry, structure of the deal, and so forth. So it's kind of all over the place. But we have our own preferred kind of deals that we like to do, but we're always open to see and have access to other new companies doing different things.
Well, what are the preferred deals you like to do? What's the standard deal that gets you really excited as far as what do they have and what do they do?
Me personally, I like to see companies with good, healthy profits. And usually it's companies looking to transition, whether it's to sell a portion of the business or to sell all the business, or they're looking to recapitalize, whether that's for taking out some chips off the table or getting some growth capital. So that growth capital could be to grow organically. Maybe they have a new market vertical that they want to branch into and they need financing for that, or it could be that they're looking to make acquisitions. So one of the best startups are fantastic, and I've had my fair share of those as well, but I also think that there are a decent amount of opportunities out there where you can buy into or acquire a business and finance it and really take a lot of that startup risk off of your plate in doing so.
So you do a wide range of deals, but what are the showstoppers or the deal breakers that keep you from doing a deal? What happens that takes you guys out of it?
I think a lot of times it really depends on the deal. When someone comes to us, there are obviously a lot of red flags that immediately will turn me off personally. But I look at the people themselves. So the deal, what I would call the deal makers, but it might be just the issuers, the company founders. What is their background? What's their experience? Do they look like somebody that an investor would have confidence in? And then what is their plan? How prepared are they for whatever it is they're trying to do? And if they've got a profitable business, it's a lot easier to put some lipstick on it and get it prepared to be able to take it to market than if it's a startup that isn't well prepared, doesn't have a good plan. The founders might not be believable. And I think it's based on a number of factors. And sometimes those factors aren't readily apparent at the first outset. So when we're doing what I would call preliminary due diligence for a potential client, it usually takes a few phone calls, and they're doing the same thing for us, right? They want to know what kind of deals have you done in our space, and what's your experience with institutional investors in XYZ industry or individual investors. And so they're doing the same thing. There's kind of a back and forth vetting that's going on there, but I think it's getting down not the learning curve, but the trust curve. Do we trust them as someone who would be a legitimate issuer of securities, and can we feel confident in our ability to stack hands and represent them when they're going out to market to do whatever it is they want to do?
And what are the top sectors that you see out there right now? And then we'll ask in a minute what are the bottom sectors, the ones that are tougher to do.
Yeah, that's a really good question. I think real estate's always great because there's investors like the collateralization that's associated with it. So when it comes to raising capital, the equity slice of the capital stack, real estate tends to attract folks to it. And that's one of the reasons some of the more successful crowdfunding portals have been real estate crowdfunding portals. So I think real estate's probably on the top. As you move down the chain, I think we have seen a lot of initial coin and token offering leads in the last 6 months. A lot of people trying to do various things in that space, whether it's raise a fund for it or raise a crypto fund or launch some new idea. And for both those and Reg A Plus deals, we put on, our goggles are very thick when it comes to the filter that we put on, just because the regulatory risk, as well as the investor risk, as well as our reputational risk is on the line when it comes to issuing those types of securities. So that's probably at the bottom of the list. And then it kind of goes back to my statement before, everything in between, you can have an A+ business, an A+ business plan, and a really good solid opportunity, but a kind of a C- D+ team, or the inverse is also true. So it's kind of is weighed on a deal by deal basis. And it really is kind of dependent on the deal itself.
I see. Well, you mentioned token offerings and so forth. That's been quite a wild ride the last 12 months with the SEC and with all that goes on in that space. Where do you see that going in the next 12 months? What do you think we're going to see from the SEC and then just from the token offerings?
I think that the regulation is good for the industry. It might slow down the amount of capital that's flowing into it for a time. But I can see eventually that just about all coin or token offerings will include some form of tokenized equity. That's my personal opinion. I think it's somewhat disingenuous to investors if you're looking at it from a long-term view to not include some sort of equity ownership in the business. Now, the great thing about tokenization is you get all the benefits of liquidity as long as you keep it for the required Rule 144 hold times, but you get those benefits of liquidity after you hold it. That's super helpful. But I actually see long-term, not only the initial coin and token offerings, including equity in almost every single one, but I also envision a day when any even private securities that are being offered are likely going to sit on the blockchain. When it becomes more mainstream, when we get through all the kind of growing pains of this nascent industry, I think that we will see more and more private securities offerings being tokenized, especially when the technology catches up with all the ideas. There's a lot of great ideas floating out there, but I think we need the tech in terms of smart contracts and using smart contracts to really play well with the regulation. And as we get better and better, I actually see more and more Reg D offerings being stuck on a blockchain for people to be able to trade freely once they pass their 6 or 12-month 144 hold periods.
Well, you mentioned the blockchain, and so much of the emphasis now goes to the core technology behind ICOs like blockchain, and there's many sectors involved, healthcare, tech, fintech, etc. Where do you think the early wins of successful applications will come in blockchain, given just about every sector has got something moving in it right now? What's the low-hanging fruit for blockchain to be successful?
That is a good question. I don't know. I think the low-hanging fruit probably will be in securities because that's where it needs to flow from. Everything else, I think, flows from there. If we really are truly looking at it from the lens of, hey, most of these tokenized offerings, even the ones that were claimed, quote unquote, to be utility tokens, if most of them are securities, then by golly, we need to make sure that they're compliant. And so I think a lot of the initial, at least now, development and innovation that needs to take place is on the securities side. And then as soon as we get the regulation figured out and make sure the technology plays well with the regulation, I think from there you'll see. And look, we've seen a lot of these really interesting token offerings, not just domestically, but in the foreign markets that are really interesting, tying the blockchain with logistics and with storage and things like that. I think you'll continue to see a lot of that. But, here in the States, if we can get the tech to play well with the actual regulation, then I think that really will allow things to really scale and grow much more quickly.
Outside the blockchain world, what are the segments you see really doing well in respect to the new technologies? There's AI, there's data analytics, there's VR, there's a lot of different spaces that are getting a lot of attention and a lot of funding too. What are you guys seeing there?
Internet of Things has been a big one that we've seen here recently. Other technologies like there have been a few kind of biotech, biopharma, pharmaceuticals. We've seen quite a number of those type of deals here recently. There's a lot of innovation happening in the life sciences arena. I think that's going to continue to do well. There are a lot of platforms that have been developed for diagnosing disease, doing some more quickly, more efficiently, more cost effective. So I think that's going to be a really hot area. There's another area that's really interesting just to note is there are a lot of really boring industries where if you look at the demographics of the country right now, we've got 10,000 baby boomers retiring a day for the next 15 plus years. And you're going to see a lot of really boring manufacturing businesses or boring service businesses that are doing quite well, $1 million to 10 million in earnings that are going to come up for sale. And I think that there's also an opportunity there. So it's not necessarily, we a lot of times we focus on the growth industries, but there's still a lot of opportunities for what many are calling the largest transfer of wealth in the history of the world because of these baby boomers that are retiring and selling off these business assets that they've spent the last 30 years building up. So there's a lot of that going on too.
That's a good point. Generational transfer is going to be quite an opportunity for somebody to help transfer that wealth over and transfer those businesses. I often find businesses from boomers, it can be hard to transfer to their children because the children don't want to do that. And so now we're finding somebody else who wants to take over that business because we just don't want to see it shut down. So it seems like there's a lot of opportunity in that space as well.
Yeah, there is. And there was a lot of pent up supply in that world because of 2008. A lot of people really put the brakes on their exiting their businesses because the valuations may have gone down, the cash flows probably went down. We're seeing a comeback, at least from about 2014 to now. It's been gangbusters. I think valuations are up. Private equity groups have more cash on their balance sheets than ever before. The market is just flush with cash. It's an opportunity on both sides. I think it's a seller's market for that. We're seeing a large volume of supply on the sell side of M&A as well.
That's good to know. Well, in the last minute or two that we have here, what else should we cover that we haven't so far?
We've gone from ICOs to M&A. What I'm really excited about is I think that the SEC they haven't turned a blind eye, but what they've been doing is waiting for the market to figure out the whole blockchain world. As soon as we can figure out how the technology plays there, I think there are opportunities for using smart contracts for things like earnouts in mergers and acquisitions or promissory notes in mergers and acquisitions, and really giving people the peace of mind that the contracts that they're entering into, they're automated, that there's an automated flow of funds, and it's non-disputed because it sits on the blockchain. So I think that's going to be really interesting over the next 10 years because it'll affect everything within finance. But I also think that the fintech world is very broad, and we haven't even scratched the surface on our ability to really broadly source opportunities and really connect the right investors with the right deals. The problem that crowdfunding has had, the big opportunity with coin offerings is the liquidity, but crowdfunding, most accredited investors are not spending their time looking for deals. They have jobs, they're working their jobs. And so there has to be really strong incentive, which ICOs gave that with the liquidity that was being had there. But there are still gaps that need to be filled. But I'm really bullish on the future on kind of in terms of all things securities related and how blockchain helps. It can help across the spectrum from raising capital to selling companies.
Well, that's great. Well, I appreciate your sharing your insights with us today about what you see in the marketplace. How best for listeners to get back in touch with you?
Sure. My email is really easy. It's Nate, Nate, at investmentbank.com, or you can just go to our website, investmentbank.com, and fill out any of the forms and ask any questions. We're open to seeing any and all deals and assisting where we can. So.
Well, that sounds great. Well, I appreciate you taking time and hope to have you back so we can dig into these topics in further detail in the future.
Sounds great. Appreciate you taking your time today.
Thanks so much.
Thank you.